Okay, good afternoon, everyone who's already joined us. I can see a few people still joining us as participants now, but we do have a lot to get through today, so we'll make a start on time. So good afternoon and welcome to our webinar on the income of not-for-profit entities. We're looking at AASB 15 NFP guidance and also AASB 1058. I'd like to introduce today's presenters. So my name is Nicole Giles. I'm the AASB Technical Director. And I'm joined today presenting with Carmen Ridley, who is a AASB consultant, and Freddie Hauser, who is the AASB Deputy Director. And for those who may not already be aware, Carmen is a recently retired AASB board member, and we're very fortunate to have Carmen working with the staff on a few projects at the AASB at the moment. Just before we start, I'll run through some housekeeping matters. So hopefully you can all hear us and see the slides on your screen. You should also be able to see a Q&A and a chat button. The Q&A button, if you can ask any questions that you have of the presenters into the Q&A box, I'll be monitoring that during today's webinar, and we'll be pausing at certain times during the webinar to respond to Q&A. If you have any technical administrative issues around sound or any issues with the Zoom, if you could pop that into the chat function, and one of our team will also be able to respond to you there through the chat function. If there's any questions we don't get to today during the Q&A, on the Q&A, we will aim to provide a response to some questions from the staff after the webinar. Although note that we're not able to provide comment on any or respond to any specific facts and circumstances, we're only able to provide general responses around how the standard does work. Lastly, we'd like this to be as interactive as possible as a session, and so we'll aim to have some Q&A also at the end of the webinar. So if there's any further questions at the end, please raise them, and we will also deal with those at the end of the webinar. And just before I hand over to Freddie to begin the webinar, our usual, firstly, the webinar is being recorded, and the recording will be available after the webinar. And also the slides will be available after the webinar. And the usual disclaimer that we have whenever we're doing AASB staff presentations is that this is the views of the presenters and doesn't necessarily represent the views of the AASB or other AASB staff. It's for general information only and doesn't constitute advice. And the AASB expressly disclaims all liability for loss or damage arising from reliance on any information in the presentation. And it's not to be reproduced, distributed or referred to in any public document without the express prior approval of AASB staff. And with all of that, I will now hand over to Freddie, who's going to walk through the purpose and agenda for today's webinar. Thanks, Freddie.
Thank you very much, Nico, and good afternoon, everyone. So hopefully you can see that I move to the next slide, which outlines the purpose of this webinar. This webinar is one of the outcomes of the short-term narrow scope project that AASB decided to add to its work program after the feedback received on the implementation experience from the stakeholders on AASB 1058 and AASB 15. On the back of that, staff conducted targeted outreach to understand the prevalence of the issues in practice. And after the board considered the matters arising from the constituents at its September and November meetings last year, it agreed with the recommendation for staff to develop additional educational materials, that is additional to the ones that we already have, like not-for-profit FAQs, to further support consistent application of the standards and to provide some signposts as to relevant sections or considerations in the standards and accompanying and associated documents such as illustrative examples and sometimes even basis for conclusions. And obviously, this webinar is one of those educational activities and materials that we are doing. Some of the matters board also decided to address through the proposals contained in exposure draft 318 that was issued in January this year, in particular changes to some illustrative examples contained in AASB 15 and AASB 1058, as well as to document board's intention to retain accounting policy choice in respect of the initial measurement of right of use assets arising from concessionary leases for not-for-profit private sector entities, and we'll talk about that later in the webinar. Lastly, but probably not importantly, is that other matters, but also feedback collected throughout this narrow scope project does help to kickstart the upcoming post-implementation review on the not-for-profit guidance to AASB 15 and to AASB 1058 that we already kicked off in terms of the review of the research literature available. Moving on to the next slide. In terms of the topics to cover today, this is the agenda for the next 90 minutes, and does include a range of the topics raised by the constituents in relation to AASB 15 and AASB 1058. We'll cover considerations such as what should be taken into account when determining which standard applies to transactions that give rise to income and or revenue of not-for-profit entities, considerations around contracts and agreements, when is the contract or agreement enforceable, what to consider when assessing whether such a contract or agreement contains sufficiently specific performance obligation. We'll talk about some specific types of transactions, such as upfront payments, capital grants, grant receipt arrears, etc. We'll talk about briefly about considerations in terms of the principal versus agency assessment, and we'll talk about also about post-implementation review and few others. We'll include some practical application considerations, and we'll point your attention to existing illustrative examples, whether in standards or in FAQs. We'll have also polling questions towards the end of the webinar, seeking your expression of interest to assist with the post-implementation review. So moving forward, this slide covers the first topic we'd like to cover, which is focusing on the scope of applicable Australian accounting standards for the consideration when looking at a transaction that are giving rise to the revenue or income, more broadly speaking, of not-for-profit entities. Obviously, it's in the form of the decision tree, and it tries to illustrate that what are the considerations or entities could make before they will actually arrive to the decision point, if you want, whether they need to apply AASB 15 and AASB 1058. And we'll discuss interaction and scope of these two standards specifically later in a webinar. This flowchart was also included as an additional FAQ, I think number 4 in updated not-for-profit FAQ staff FAQs that we released on our website recently, and we have links to the FAQ throughout the slides. Obviously, this slide or decision tree doesn't necessarily provide assistance with accounting or determination of recognition and measurement requirements, really just to illustrate what are potential relevant accounting standards when assessing those transactions. It doesn't illustrate all accounting standards that might be applicable. For example, if a not-for-profit entities writes up insurance contracts, they would need to consider applicable insurance accounting standards that may apply. I think the main point what we want to illustrate here is that there will be a number of transactions that will give rise to income of not-for-profit entities that are not necessarily in scope of AASB 15 and or AASB 1058, and they might be ranging from the leases to the financial instruments, etc. So I think that's an important reminder what we want to make on this slide. Moving on further, with this slide, we do focus further on distinction between the scope and interaction of AASB 15 and 1058 and under other standards. This is essentially actually extract from the flowchart that is contained in Appendix B of the AASB 1058. So I think it's very useful flowchart to be aware of within that appendix. And it does illustrate a bit of decision tree, how to navigate 1058 and related standards. It doesn't include volunteer services or a consideration of volunteer services, and also it doesn't include accounting for capital grants. And again, as a caveat, that you need to say it doesn't include all standards that might be relevant once in the scope of 1058 or otherwise. And for example, if the transaction is in scope of AASB 1058, but the donated assets, for example, or income is in the form of non-financial asset that might be in scope of AASB 116, property, plant, and equipment, then that standard might be relevant or would be relevant for the asset recognition and measurement determination. So what we try to illustrate here is that the scope of AASB 1058 is really in relation to transactions where the considerations for the acquired asset is significantly less than its fair value, and principally the asset is principally acquired to further not-for-profit objectives. So on the left-hand side, you can see that if that's not the case, the other standards apply. An obvious example that may apply to many transaction might be AASB 15, and that's where the not-for-profit guidance to AASB 15 might be helpful and is in place for not-for-profit entities. So if the transaction is not in the scope of AASB 1058, that is, the asset is not acquired at significantly less than fair value to further not-for-profit entity objectives, but is contract with sufficiently specific contract with customer with sufficiently specific performance obligations, that's where or when AASB 15 would apply. Other way how the requirements of AASB 15 might be applicable is in a situation where the asset is acquired at significantly less than fair value to further not-for-profit entity objectives. So that's the right-hand side of the flowchart on the screen. However, when considering the related amounts in line with AASB 1058, AASB 15 requirements might be relevant to recognize either, for example, contract reliability or revenue from contracts with customers. This is also covered in FAQ 5 or renumbered FAQ 5 in updated FAQs. I think it was previously FAQ 4, which steps through a number of questions that I think kind of already walked through, but essentially considerations to take into account. Is the asset required at significantly less than the fair value, principally to enable not-for-profit entities to further its objective? Does the transaction occur in a contract with customer? Is that contract enforceable? And does that contract include sufficiently specific performance obligation? And this is not necessarily just decisions in the scope applicable to AASB 15, but also, as we mentioned, AASB 16 may come into play or may need to be considered before any considerations AASB 1058, because essentially the transaction is not where the asset is acquired at less than a significantly than fair value. However, then the considerations of AASB 16 can come to play, for example, in terms of recognition of asset or related amounts in form of liabilities, if the transaction is actually acquiring assets less than fair value and to further not-for-profit entities' objectives. So hopefully this clarifies that AASB 1058 is essentially a residual standard, and I think that's mentioned in basis for conclusions to AASB 1058. And AASB 1058 does look at the requirements of other relevant Australian accounting standards, that is on asset side, measurement and recognition, as well as liability and revenue side before recognizing an income in profit and loss. And we'll talk about that further and a few more times during this webinar. Moving on to the next slide. This is just a summary, really, that obviously the impact of or the consideration which standard is applicable, and then they may be applied in combination, does impact timing and amount of any revenue and or income being recognized. Obviously, AASB 15 is internet based on IFRS 15, which is international standard, which was not necessarily written with not-for-profit entities in mind or in focus, and that's why AASB decided to add Appendix F to AASB 1058 amongst other appendices, and also issued AASB 1058 to cover the not-for-profit sector specific transactions such as grants and donations, etc. And as Carmen will talk about very shortly, there are certain criteria under AASB 15 when the revenue is recognized in a very short manner to summarize when it satisfies it satisfies the performance obligations by transferring goods and services. Whereas, as I mentioned, AASB 1058 is operating on a residual basis and looks to other requirements of other Australian accounting standards before the balance, which is the difference between the fair value of the acquired asset at initial recognition and any other related amounts recognized, is accounted for as an income in P&L. With that, if there are no questions or comments to address, I will hand over to Carmen to talk through specific considerations when applying AASB 15 and AASB 1058. Carmen, over to you.
Excellent. Thanks, Freddie, and welcome everyone. Freddie's just told us how there's two accounting standards for not-for-profit entities, so AASB 15 based on the international standards and AASB 1058, which is an Australian specific one. And he mentioned that there were criteria that are needed to be satisfied in order to get within AASB 15. So the first thing we wanted to focus on is what are those criteria? As we talk through, you should recognize some of the terminology, and it is an area that many of you raised that you did have some implementation concerns. So we are going to explore some of these criteria in a bit more detail. I just wanted to talk about it at a holistic level so you can understand how we get into 15. First criteria is that the contract has to be enforceable. So we will explore some examples of enforceability a little bit later on. We will look at what does it actually mean and how we can prove that our contracts are enforceable. Effectively, why we're looking at enforceable is we want the other side to be able to bang their fist on the table and say, we have the ability to either make you do something, make you do what we gave you the money for, make us give the money back, or some other way that we can actually make sure that if we provided you with some money, we get the benefit back from that. So that's the principle behind the enforceability. As I say, we look at some examples. There are some examples in the standards. What we've tried to do as well, based on some of the queries we get, is where what we're talking about is direct from a standard. We have actually included the reference here for you to look at. So you notice some of the references look a little bit strange. So if we look at the enforceability one, we've got a reference there, AASB 15.F12. Hopefully you are all aware that in AASB 15, there is a whole appendix that is there written for you guys as not-for-profit entities. So it helps with some implementation guidance. It helps with some of the rationale behind why the board looked at some things, some examples in there. So don't just look at the standard itself. Please make sure you do drill back into that appendix because there is a lot more guidance in there for you. So you will see a number of references for that. The next criteria, that is a criteria that's often missed by a lot of people that I talk to, is that in order to be within AASB 15, there has to be a promise by the entity receiving the funds, so by you guys, to transfer either goods or services to an external party. So if you are just receiving money and that money is for you to do operational things internally or for you to construct or acquire an asset that you will have on your books so that you will control, you can't be within AASB 15. There has to be an actual promise that we're transferring to an external body. Now within AASB 15, it does use the terminology customer. In that appendix to AASB 15, it talks about the customer will always be the fund provider. So whoever gives you the money is your customer. They won't necessarily, however, receive the benefit of the goods or services that you are provided. There could be an external beneficiary. So if I'm providing you some funding to help, let's say, women returning to work after having children, the beneficiaries of that funding are the women returning back to work. So it doesn't need to be that the person providing you with the money is the person receiving the goods or services. And we explore that a little bit more in Appendix F, customer versus a beneficiary. The third criteria, and the one that probably everyone will roll their eyes at, is that we need to have a performance obligation, and that performance obligation has to be sufficiently specific. So we will explore as we go through what does sufficiently specific means. Unfortunately, I am not going to give you a magic bullet, and I'm not going to be able to tell you what exactly sufficiently specific is for every one of your contracts. Hopefully what we can do though is point you in the direction and give you a little bit more guidance. It is judgmental. We acknowledge that within the standard. We acknowledge that within the appendix. So it will require you to think about it, to make a decision and to document your decision about whether something is or is not sufficiently specific. But hopefully after this session, you've got a little bit more assistance to help you to do that. So those three criteria, you'll see there's very big pluses in between each of those circles. They have to be satisfied to get within AASB 15. If you fail one of them, you are not within AASB 15. And we heard Freddie talk that AASB 1058 was a residual standard. So if you don't meet the criteria for 15, you fall into AASB 1058. So let's have a bit of an explore on why we even worry about which standard we're in. Why does it matter? It matters because we end up with very different revenue recognition depending on which standard we're in. So if we're in AASB 15, we know we have to have a performance obligation because we've just seen that as one of the criteria. And what we do is based on that performance obligation, that promise that we're transferring, we recognize revenue as or when we transfer that performance obligation, control of that performance obligation to the external party. So we might end up with revenue recognized at a point in time. So if, for example, I'm selling you a good, I hand you the good, you've taken control of that good, and I recognize that at a point in time. Or it might be over a period of time, which is often common with a service that I'm providing. If I'm in AASB 1058 rather, then I've got there either because my contract is not enforceable or because it doesn't contain sufficiently specific performance obligations. So I failed at least one of those criteria from the previous slide. The way that this works is we sit as an entity and we say, okay, do I have an entitlement to an asset? Now, remember, cash is an asset. We often get caught up in thinking of property, plant, and equipment, or receivables and everything else. Cash is an asset as well. So you've received some cash, you are debiting the cash that you've received. Then the rest of AASB 1058 helps you work out what the credit is. First, we have a look and we say, is there any liability that is associated with the particular asset that we've received? And that liability has to be recognised in accordance with an accounting standard. So it could be that we have got a particular provision. Let's say we did receive some land. It's pretty mucked up land. We had to decontaminate it, and that's a given as one of the conditions. We could have a provision in related to that. We could have a provision in related to a different accounting standard. We have to have a liability in accordance with an accounting standard. And Freddie, in one of his earlier slides, did have a little bit of a list of what some of those other accounting standards could be. We might say there's actually no liability associated with it. So for example, I'm just giving you a donation. I'm giving you a $1,000 donation. I tell you that you can spend it on whatever you think in order with your objectives. I can't enforce that. I can't do anything else about it. There's no liability associated with it. So we have the asset. We have any potential related liability, and the difference is income or revenue, depending on where we sit, whether we've ended up with jumped back into 15, that second way that Freddie said we could get back in there. So that's the way 1058 works, quite a different model from 15. So you could end up with different timing. The amounts overall will be the same, but the timing of them could be quite different. So let's drill through and explore some other issues that were raised to us. Documentation was a question that we were asked a fair number of times. And the question around documentation was, what do we look at? We often, with these, we'll use a grant example, we often have a huge number of pieces of paper. We might have the proposal that we put in initially. We might have the contract that we've got. We might have work schedules. We might have other different implementation